right. I think what we will do is get started. So thank you everybody for being here today. This is a really exciting topic we're going to dive into today. We're lucky to have Tracie with us, but we'll get to that here in a second. I just wanted to, those of you who have been on last week's, you're going to hear some of the same things from me here real quick. But just as a reminder, this is a webinar series that we're running with the ISBDC. This week's is talking about best business practices, and we're lucky to have Tracie Davis with us today. She's taking some time on a day off to be here with us, so we appreciate that. But as a reminder of who I am and who the team is that's helping facilitate these, my name is Jeff Zentz. I'm the Indiana director working for Generator. Generator is an organization that's an equity-based accelerator program that we have, that we've been in the Indianapolis area for the past 2 years, running a program we call G-Beta, if you've ever heard of it. And so I'm lucky enough to be part of the team that partners with the ISBDC to help kind of run these, to help give information, best practices, things that we can do to help not only high growth venture startups, but also Main Street businesses that need help through this challenging time. That's my email address too, so please feel free. I love the engagement that came from last week. I had a few emails pop into my email box. Please feel free to message if you have any questions. And one small thing, if you do have questions throughout the process of this webinar, use the chat box or the Q&A feature. I'll be watching them as Tracie's going through her presentation. But please, we want to have a conversation. And if we can answer specific questions, we would love to do that. So and this is all part of the Small Business Resiliency and Recovery Training Series. We're going to do these webinars every Friday at 12 p.m. Eastern, going all the way through March of 2021. So each week's going to be a different topic. We'd love to have you at every one. We will have these wide open, and the recordings, if you have to miss one, the recordings will be up on the ISBDC YouTube page as well. We haven't got the first one up yet, but hopefully we'll have it up in the next couple days along with this one right after. So with that being said, give me 1 second to get moved over here to Tracie's deck, and we will turn it over to somebody that we would rather listen to than me. All right.
Okay. Well, welcome everybody. And as you might know, a day off during a pandemic, especially if you're working from home like I am and have been since the middle of March, really doesn't, it's not much different than a day off is not much different than a day on. So happy to be here. What we found, we've learned a lot of lessons. The Indiana Small Business Development Center has learned a lot of lessons through the pandemic. And I'm going to go over some of those now. Some will be obvious if you are already in business and you already have a very good, stable platform of good business practices. But some might surprise you. And if you're not in business yet, it's either good news or bad news. Good news that you have a playbook of how to move forward. Bad news, if you weren't ready for all the work involved that comes with owning your own business. So I wasn't able to get my screen to show, so I'm going to say next every time I'm asking Jeff to change the slide. This is my email address. Everywhere in the state of Indiana, there is a business advisor for you. So I'm in the North Central region, and those 5 counties are St. Joseph, Elkhart, Fulton, Kosciuszko, and Marshall. And if you live in one of those counties and would like to connect with the Indiana Small Business Development Center, please email me. My email address will also be at the end of the presentation. Next. So here's what we learned very quickly. So many of us learned lessons overnight during COVID. We learned that small business owners could no longer ignore good business practices. I've got clients who have multi-million-dollar revenue per year, and I have a client who has a bait shack on a river and sells bait from that shack, and that's his business. None of them, anybody who had shaky business practices, were severely handicapped during the early days of COVID. To get through it, small business owners often had to trade sleep for revenue. Revenue is the blood that pumps through any business. And if you didn't want to give up during COVID, and there were some business owners who did, you had to trade sleep for just about everything else. And from here on out, another lesson we learned is we know now that the unknown is possible. So small business owners during the early days and even until middle of August are learning to pivot, rebuild, restart, and then create a very stable platform to move forward. Next. All right, these are the things that we found out that there were some businesses that started without them, but they did not get through COVID, the pandemic, very easily. You need reliable access to a computer, not just a tablet or smartphone. There were some disaster financial loans in place. Small Business Administration had what we called the EIDL, Economic Injury Disaster Program loan. And then through the CARES Act, the Paycheck Protection Program loan was rolled out. And then early in the summer, the state of Indiana launched the Indiana Small Business Restart Grant. These were all online applications, no paper, no call somebody and apply over the phone. And what we found with a lot of our clients, that you might see the screen, but it didn't always take your application for any of the three disaster or recovery financial options that were available. If a business didn't already have a relationship with the word local is very specific here, with a local bank or credit union, it was almost impossible for them to apply for the Paycheck Protection Program loan, even if they qualified. Local banks and credit unions were just overwhelmed with applications, and they were prioritizing existing clients, and can do that. There were some federal lenders, like online legitimate lenders like Cabbage, and they took applications as much as they could, but in every instance, it was preferential treatment or put you ahead of the line if you had a local bank or a local account with a bank or credit union. A lot of our clients were working through Chase and other national banks. And the thing with a national bank like that is the Paycheck Protection Program loan was a very low credit loan. It was secured by the Small Business Administration, and banks and credit unions made their money through a commission on the amount of the loan. So if you're Chase Bank, and this is nothing against any national bank or Chase specifically, but if you are Chase or a national bank, you've got a big furnace to feed. So to write a $10,000 loan for someone in Goshen, Indiana, and I'm just, an NBA team in California they qualified for a $14 million loan, but I think I've heard that particular NBA example gave the money back. You're going to make more money off of the $14 million loan. So you're going to focus your efforts on that. We had a lot of clients who did not have a local or even national bank account. Being registered with the state of Indiana and or filing business income taxes with the IRS and the Indiana Department of Revenue was vital. When we meet with clients, we explain the expectation that businesses are going to report their income or expenses, but a lot of businesses don't. And we understand that. The Indiana Small Business Development Center is not a reporting agency. We explain what good practices are. We try to help clients learn about those good practices and implement them. But it comes down to choice. And if you weren't registered with the state of Indiana, or you didn't have, if you weren't registered as a business with the state of Indiana, you weren't eligible for the Indiana Small Business Restart Grant. If you had not filed income taxes and included your business income in 2019, you didn't qualify for the Economic Injury Disaster Loan or the Restart Grant. And so it was shocking, the number of businesses who hadn't done that prior to 2020. Basic understanding of bookkeeping practices is also vital, or paying for a bookkeeping service, bookkeeping services. When it comes to small business, whether it's website development, social media, marketing, bookkeeping, financials, you're either going to spend time learning how to do it yourself, or you're going to spend money on a service. That's a good business practice that benefited clients who were affected by the pandemic. And so if you didn't have it's something called P&Ls, profit and loss statements, it was very difficult to qualify for either the Economic Injury Disaster Loan or the Indiana Restart Grant. We're getting down to, these are kind of in priority list, but a strategic plan or marketing plan that includes social media is important, not as important as the items before it, but as you'll see in just a second, the clients who survived through social media. And excuse me, strong or at least healthy cash flow. I have a client who has a retail business that's about 3 years old. Somehow, through some very careful business management, she entered the month of March with $50,000 of cash flow. That's kind of like a business savings account. And that's a shocking amount for so many of my clients. But until her resources were coming in, like the Economic Injury Disaster Loan, she applied for that and got that. The Paycheck Protection Program loan, she applied and got that. Until those things started coming in, she was keeping the business afloat with that business bank account, with that cash flow. Next. So I've got 3 success stories for you. This is a business in Rochester, Indiana, and I've asked the clients who I mentioned by name, I've asked for their permission. All client information with the Indiana Small Business Development Center is completely confidential, unless you in this instance, give me permission to say your name. And Northern Traders is a antiques mall my dog's going to bark in a minute because the mailman's walking by. Just going to warn everybody. It's an antiques mall. I knew it. Sorry. So now you're going to come with me as I force him to go outside. They had established some very strong business practices prior to COVID, but it hit them hard. And there were several times that the owner said to me, should I just give it all up? Because there was a long wait for any funds that were coming from the economic injury disaster loan or the Paycheck Protection Program loan. A long wait. And if your business is closed, just flat out closed, it felt twice as long. And what she decided to do, because she had nothing to lose, she had lost everything, as far as that was her feeling, she started doing daily and sometimes twice daily TV shows. They're not called TV shows, but her primary social media form of promotion and marketing is Facebook, and she did twice daily live events, video events on Facebook. And this is just a screenshot from one of the, and down you'll see in the lower right hand corner is the very famous Roger, their black lab, who is always at the antiques mall, and everyone loves him, so he was in every show. And then it was nonstop posting of available products. If vendors brought in new product, she was posting photos. She was working 18-hour days. She was kind of running herself ragged. She knew, as we discussed, strategy. They also offer new furniture, much higher product price, and she doesn't have she gets all of the profit from selling a mattress versus a very small rental from an antiques vendor. So she started pushing the new furniture, and they've been in business for 8 years, and May 2020 was their best month ever. Not during the pandemic, not just during 2020, but in 8 years of being in business, May 2020 was their best month ever. Next. So I have a client who is a very quirky, very unique, and very well loved on Instagram pastry chef. She entered 2020 cleaning up some poor business practices. She was already had a very strong brand following, and but her revenue, she was happy if her revenue was $2,000 a month. It's a very small micro business, but she's a classically trained pastry chef. And so it's very unique in the South Bend area. She also felt, okay, I have nothing to lose because I don't have anything. I can't have pop-up shops. That's how she usually sells. I can deliver. And she made every delivery a party. She would post on Instagram at the start of the day when she was delivering, and she would identify who she was delivering to. She was rewarding people for tagging her on other social media posts. It became a very integrated social media strategy that created a lot of buzz around what she was doing. She created themed treat boxes. Again, her brand is very quirky. So there's nothing about this image that's on the screen here that says that she's got the best grammar, that she's got the best, but for her target audience, they were figuratively eating it up and literally buying everything she was selling. She created some COVID cupcakes that looked like the COVID virus, and they were smaller. If you posted a video of smashing this COVID cupcake, then the next time you ordered, you got something special. And it was just nonstop. And she was working, I got a little worried about her because more than 18-hour days, because she was it. She was the baker. She was the delivery person. She was the promotions person. And so she was happy with pre-COVID, $2,000 a month. During COVID, her high month was $10,000. That's 5 months of revenue in 1 month. And thank goodness this is kind of a double-edged sword, but I said to her, well, at least you can't go anywhere and spend all this money. So let's stabilize your operations. Because I think if it hadn't been COVID, she would have jetted off somewhere. So it was, kind of a mixed blessing there, with her having so much money all of a sudden. Next. So this is a business called Fun by the Yard. And she does yard signs, she does balloon sculptures, and her business was a little sluggish. We were working on very specific goals for 2020. I challenged her as far as revenue goals, and she decided that what she was doing, and it delighted her customers so much, it was deserving of media attention. And so she, again, it was one of those things where she thought, what have I got to lose? She was calling every local TV and radio station, anything that could be, so it would be easier to either visual or verbally to explain what she does, and national media. And she made it onto Good Morning America. The screenshot here is from her virtual interview with Good Morning America. She was working 80-hour weeks, March and April, and the marketing messages focused on how to make the events during COVID best ever. So she was coordinating drive-bys, the signs would be in the yard, and then she would send emails out as a surprise to the recipient to go, just random strangers, go by this house, look for the signs and honk when you go by. And so she was kind of making parties possible. It was pandemic parties and social distanced, but it was just really very inspiring of how she was connecting strangers and making events. I'm even getting a little choked up thinking about making special events special during a time when a lot was taken from all of us. But really specifically, that is, she hit her 2020 revenue goal by the end of May. And that was a stretch goal. It was a goal I talked her into. She didn't think she could reach it, and she reached it by the end of May. So the rest of the year, which is still going well, is just gravy for her. Next. So this is kind of these examples and the basic strategy or basic good business practices are a combination that everybody should be doing, whether it's pandemic or post-pandemic. The challenge for me as a business advisor is, how do I motivate 100% of my clients to work that hard? And that really is what's required. When you look at Bill Gates, and you look at Steve Jobs and Steve Wozniak, who started Apple or Facebook, there was some very intense 18-hour days that we never see. Now, I think they kind of show them in, there's a movie called The Social Network, which is kind of how, like a dramatized version of how Facebook started. So you don't get to be a Microsoft without losing sleep. Sarah Blakely, who is a self-made billionaire with a B, as in not millions, billions. She's the inventor of Spanx. She 100% still owns her business. And she didn't become a billionaire by only working a 40-hour week. She was working a full-time job, selling fax machines, and another 80 hours a week trying to launch Spanx and learning as she went. And that, whether you have billion-dollar aspirations or you have, I just want to replace my employment income aspirations, it's what's required. So these are the 4 tips that I would love for every business to adapt or adopt as they either launch their business or stabilize it in the post-COVID world. And I know we're not there yet. We're not in the post-COVID world yet. So you've got some time to get these things in place. But you're going to have to embrace technology. You need to stabilize your access to and understanding of computers and bookkeeping tools like Excel or QuickBooks. I would say that the majority of startup businesses start with just the owner. There's not always money available to hire the person who's going to be the operations person or the in-house bookkeeper. It's great if you can hire that out. If not, it's not something, this is what we've learned, it's not something that should be put on a shelf for someday. The rules are the rules. Include business income in your tax return. The IRS, when I was 12 years old and started babysitting, technically, I should have included my babysitting income on my parents' tax return. Does the IRS know that most babysitters don't do that? Yes. Does the IRS know that some small businesses don't claim their business income? Yes. And the IRS is underfunded and understaffed. They're not going to start auditing or start pounding the pavement and going door to door to see if somebody has a business they've started. But the people who were filing their business, reporting their business income on their tax return were the ones who had access to the economic injury disaster loan, the paycheck protection loan, and in Indiana, the Indiana Small Business Restart Grant. Develop brand awareness and then out McDonald's with a formal marketing plan. McDonald's, you would think McDonald's doesn't need to market. They are on all kinds of streets when I'm driving from county to county. I know where all the McDonald's are, but McDonald's never stops marketing. Nike never stops marketing. Nike's one of the brands known globally. Coca-Cola never stops marketing. You can't stop marketing. And my client, who's the pastry chef, embraced that before COVID. She loves baking and she loves the branding. She loves people. She loves developing her brand. And that is what kept her afloat and above and beyond afloat during the early days of COVID. Start a rainy day fund with a percentage of net revenue. Net revenue is also your business's profit. This is very, if any of you listen to Dave Ramsey's podcast or radio programs, this is a very personal budgeting 101. It's all of my clients will tell me, I'm only making X a week. I can't put money aside. I'm just breaking even. So this is something that we would get into in a client and business advisor relationship. If you're just breaking even if that was your situation pre-COVID, COVID has been very tough for you. So you want, again, these stable business practices will get you hopefully beyond the break even if it's $1 a week. If you start that habit, the person who had $50,000 in cash flow at the beginning of COVID is a worrier. And she worries, and she felt that there could be a someday she'd need that money. So start being a little bit of a worrier as you are either stabilizing your business or starting your business. We now have to assume that the worst can happen. A business could be closed through no reason, totally out of their own control. But we now are aware of that. And so let's plan a lot more carefully. It's kind of our message. Next. So there are 10 regions of the Indiana Small Business Development Center in Indiana, and this map kind of shows you where you might be. Just go to isbdc.org, O-R-G, and there is a very easy to navigate. Want to meet, click on that, and then it will take your zip code and direct your intake, your request to meet with a business advisor to your region. So you don't even have to figure out where you fall. But our services are at no charge, and client confidentiality is extremely important to us. And it's one of, and I'm not just saying this because they're my employer, but it's one of the best resources that is available to small business owners in Indiana. And you aren't required to meet a certain number of times. You aren't required to, we do hope that you will make progress from meeting to meeting. But we also are working on your schedule. If you take a little longer to make progress, we're still there for you, and to give you the best advice we can. And then now, hopefully, stabilize new businesses and help existing businesses do the same. Next. Oh, and here's the, this is a business. This kind of takes you to the Indiana, I'm not sure. Now I'm caught off guard. I didn't look at this slide. It was part of the template, but that's another place where you can learn more about InBiz. Thank you, everybody. If you have questions, I'd be glad to answer them. And otherwise, comments as well. Love to hear success stories about COVID as well.
So Tracie, we don't have any questions at the current moment, but I have one for you. So one of the threads I think that you even maybe consciously or unconsciously mentioned on all three of those success cases was that you had worked with the business owner already to set some goals. How would you recommend a small business kind of going about setting some of those goals so they can have those markers, and how important do you think that was overall to their success?
It's incredible to any business's success. There's a really great book if you are a data geek like me. It's called Measure What Matters by Patrick Doerr, it's John Doerr, D-O-E-R-R. He was in the 1970s Silicon Valley. So Silicon Valley, Apple and Microsoft didn't invent Silicon Valley. It was hatching in the late 60s, early 70s. And John Doerr was one of the people who was there. And this concept of setting stretch goals, it was also hatched out of Silicon Valley during the 70s. So it's a really interesting look at how Google became as big as it did. They followed this idea of setting stretch goals and then measuring along the way. So if you, the clients who did well, who accepted my challenge, were honestly did it because they had nothing else to lose. It was almost out of desperation. Now, Fun by the Yard, that we were pre-COVID. That when I talked her into a revenue goal, that was in 2019, and she begrudgingly accepted it. It was just sheer panic and fear that drove the three businesses I mentioned, because these businesses were how they made a living, how they paid rent, how they fed themselves. So that doesn't hurt, to be a little afraid and you feel like there's the wolf at the door. But the other business I mentioned, the retailer who had $50,000 sitting in a bank account when she had to close her store, but still wanted to pay her employees, was she also was looking at, okay, if we hit this revenue goal, we will do X, and we will put this percentage. She came up with all herself. So I do think that whether you're just starting your business, it's good to have goals. I this week worked with someone who had a goal of forming a limited liability company by end of August. And this week we did that. And the reason they wanted to form an LLC, limited liability company, was because of the type of business that it was, and they also where they bank required an LLC for a business account. So they're it's like, okay, sometimes you feel you're operating at a snail's pace, but that snail is traveling on a road built with gold bricks. If the reason you're traveling at a snail's pace is because you're you're building this really strong structure. You're doing your homework on, should I have liability insurance? Now, and the answer is usually yes. Now I'm going to go compare costs. I'm not just going to go to my homeowner's insurer and accept the price that he or she gives me. It's much smarter business move to compare costs. So I'm going to call several places. And then the next step is this, and especially if you're working a full-time job while you're hoping to start your own business, those things take time. So patience is required, but every time you add one of these gold bricks to your road to this wonderful business that you have, you're just on such solid ground that something like COVID-19 comes along, it has affected 100% of the population one way or another. And so there's nothing to out strategize that, or you can't out stabilize a pandemic. And we don't know what that next thing could be. In my lifetime, I may not see this again. But the more effort you put into, this is the right way to do things, versus I'm in a hurry and I just want to sell shoes. I'm working with a client right now who just wants to sell shoes that he's buying online and flipping. So, and he's buying from friends, and he's buying from, who have multiple barely worn Air Jordans. And he just wants to sell shoes. And I'm putting these barriers in his way. I'm saying, well, legally, you need to charge sales tax. And in order to charge sales tax, you have to do this. And in order to do this, you also have to do that. And I lose a lot of clients at that point, where there's too many steps between selling the shoes and talking to me. I don't know if those people go on and sell their shoes or bait or whatever, because we lose touch. But I do know a lot of people who sold shoes because they circled back around during the early days of COVID, March, April, and May. I was hearing from all of them, because the kind of shaky structure they had put together, it was like speaking about the wolf at the door, it was like Three Little Pigs. COVID had blown their house down. It was a house of straw. It had been blown down. And so they're kind of starting over, and they want to do things the right way. I'm hearing that more and more from existing clients that I haven't heard of in a very long time. And they recognize that the house of straw, the house of sticks that they put together just wasn't good enough at this point. They're probably right back at square one. And so it's not a good thing. And nobody I know who works for the Indiana Small Business Development Center likes to say, I told you so, because it hurts us as much as we take this kind of like, we connect to our clients and we want them to do well. We would love to be wrong. I'd love to be wrong about this whole presentation. But I know I'm not. In this situation, I'm not.
That's great. And, I think that is a great segue. I don't think we have any other questions at the current time, but for those who came today, please feel free to reach out to Tracie or myself. We'd love to hear more about your business directly, how we can help, how we can put you in touch with other folks that can help. That's really important. Like Tracie mentioned at the end, the stayinbiz.org is a great resource for kind of looking into, obviously contacting your local ISBDC contact, but then also things that we talked about last week, as in COVID funding options, other great opportunities, one of which we're going to talk about next week. And so I'll use this as my plug for next week's topic is going to be on business resiliency in the digital marketing world. So we're bringing in one of my colleagues, Cole Shearer, who is a digital marketing expert. He's the guy that we work with for all the digital marketing side. And we're going to talk about some opportunities too, even with the ISBDC and I believe it's IU, that we have some opportunities to help small business get some digital marketing things going. And so stay tuned for that. We'd hope to see everybody back next week. Friday at noon, again, we'll have the digital marketing webinar. And again, thank you, Tracie, for taking time on your day off to be with us today.
You're welcome. Thanks, everybody. Thank you, Jeff.
So that'll wrap it up for today. So thanks, everybody, for coming. Have a wonderful weekend, and we'll see you all next week.